In this video, we will discuss about the technology companies, and we will cover total 10 companies in this video. 3 to 4 companies will be large cap, then 3 will be in the mid cap range, and then 4 company will be in the small cap range. Now, after the rate cut in US, the technology sector is expected to do well, and the companies that we will discuss mostly have given decent results. And with this rate cut change, I'm expecting that they will do much better in the longer term, because fundamentally these companies are good, their business is good. So if you are a long-term investor, you can research on these companies, whatever your preference is, whatever your risk appetite is, whether you want to go with a large cap, mid cap, or small cap. So let's start. So first company is HCL Technologies, and if we look at 6-month return, 6-month return has been 37%, YTD return has been 32%, 1-year return has been 38%, which is very good. 5-year return has been again excellent to 61% in a large cap company. And that's what happens. The more you increase your horizon, the better your results get if you stick with the fundamentally good companies, even in large cap. Now, if you look at the maximum chart pattern, you will see that it is going from the bottom left to top right. And this is a sign of a fundamentally good company which is consistently growing. Wherever you see a company which is going like this, then it means that there are a lot of fluctuation. The business is not stable. It is maybe most probably cyclical. So that is where it is very difficult also to hold. But in companies like this, if you invest for a longer horizon like 5 years, then the probability of you making a return is much higher. And in this list, you will not find Infosys, Tata, because they are also good company. But the only reason that I have not included them is, one, they are very big now. So for them to grow, it's a very big challenge. This company is also one of the large cap companies, but still compared to Tata, Infosys, it is still growing at a much faster rate. And you will see that in the return also. If you compare the return of Tata with HCL, you will see a huge difference. So the difference is only because this is growing at a much faster rate. And as I always say, market rewards company which is growing. Now here you can see the market cap of the company. The market cap of HCL is 5,34,000. So it is the third largest company in the IT sector. And here you can see the sales growth of this company. In the last 12 trailing month, there is a dip, but I think now it will pick up. Now if you look at the profit growth is also decent compared to its size. Stock price CAGR, you can see it's very good. 3-year 20%, 1-year 32%, 5-year 29%, 10-year 18%, and return on equity is also very good. So in the big blue chip companies in IT, I think this is a good choice. According to me, this is my view. Next company is LTIMindtree, which belongs to again a very renowned group, Larsen & Toubro, and this is also kind of similar to HCL. It's also a big fish in the IT sector, but again growing at a better rate than Infosys, Tata. So this is also a good company. If you look at the 6-month return, it has been 33%, YTD 7%, 1-year return has been 13%, not that great. And 5-year return, it is not showing properly because it got merged with Mindtree. But again, it is just like HCL, a small company in the IT sector, which has a potential to become big. So here you can see the sales growth. 10-year, 5-year, 3-year has been very good. 12 trailing month, there has been a little struggle, which we are seeing across everywhere, all the companies in IT sector. Profit growth also has been very stable. Only in the last 12 trailing month, we see a dip. Stock price CAGR in 5-year, you can see it is still very good, 33% CAGR. So 33% CAGR return in over a period of 5 years is not less. It's a very handsome CAGR return. In last 3 years, there has been no return because of the consolidation phase, and it went up really high, and after that it has been consolidating. Last 1 year return has been just 10%. But I think this can do better. Now the situation is also improving. Return on equity also, you can see it's very good. So a good company in the large cap sector. You can definitely do your research on this one as well. Next company is Persistent, and if you look at the 6-month return, it has been very good, 71%, and YTD return has been 76%. 1-year return has been excellent, 88%. 5-year return has been fabulous, 1,800% return in the period of 5 years, which is amazing. And if you look at the maximum chart pattern also again you'll see the same thing. It is going from the bottom left to top right, and all-time return has been around 6,000%. And the market cap of the company is around 1 lakh crore. Now there may be a question that why other IT companies have not given this kind of return, why only this company has given such a good return in 1-year period also, 5-year also, and in last 6 months also. So the reason you can guess, and the reason is simple: growth. This company is showing growth. So here you can see its quarterly numbers. In the quarterly numbers also, where other IT companies are just showing a growth of 4-5%, this company is still growing at 15, 18, 20%. That is the reason market is giving this company a higher PE also, and that is the reason the company share price is also growing. Here you can see in more detail, the sales growth has been consistent. 10-year 19, 5-year 24, 3-year 33, 12 trailing months 17. Profit growth also has been very good, 16, 27, 36, 23. And that's why you see the CAGR also has been excellent. 10-year 33, 5-year 81, 3-year 44, 1-year 79, and return on equity is also decent, close to 25% now. Now with this company, there is a small risk, which is this, which is the PE. So PE, you can see it's 81, whereas for other companies, it is around 33, 30, 30, in the 30 to 40 range, right? But for this company, it is almost like double. Okay, and the reason I've already told you. Now the risk with this company is, till the time this company keeps showing growth of around 20%, this will continue to grow at a good rate. But whenever this company start showing less growth, then again a re-rating might happen for this company, and it might go back to the PE that other IT companies are at if it starts showing the same level of growth. So this is one point that you might have to consider in case if you want to invest in this company. But otherwise, the company is growing at a good rate, and if it keeps on growing, then we can expect the share price also to grow in the same direction. Next company is PB Fintech. It's not a core and core technology company like TCS, HCL, Persistent and all, but it belongs to a technology sector only. That's why I've taken this into consideration. So if you look at the 6-month return, 6-month return has been decent, 52%. YTD return has been excellent, 161%. 1-year return has been 158. 5-year return is just 56. It got listed in 2021, and when it got listed, there was a dip, and after that, slowly it has started recovering, and it has breached its previous peak already. And the reason for it, this downfall, is the market condition at that time, and also it was not into profit, it was still showing losses. But recently the company has started showing profit as well, and that is where you are seeing an improvement in the share price also. And in terms of business, this company has an excellent business. It is a market leader in its sector, and it has 90 plus of market share in its sector. So the business model is very good. It is just like an aggregator, like we have Amazon for products. We can say this is the Amazon for policies related to health insurance. So business model is very good, and the management is also very good. And I believe the longevity is also there with this business, because the policy business is going to exist in India. It is only and only going to even increase more, because the insurance sector or insurance is still very, very underpenetrated in India, considering the population that we have, still has lot of potential. And once you take a policy from Policy Bazaar, I think you get used to the convenience, and you hardly then think of anything else to renew your policy. So it's a stable business, a cash flow generating machine, we can say. I really feel that this company can do very well in the next 10 years as well, and it has the potential to become a very, very big company. But again, these are all my views. I would request you to do your own research and then take the decision. So you can see here that the company was showing losses earlier. If you look at this, the profit before tax, you can see it's in negative. And the reason was because it was concentrating more on getting more customer, getting more market share. And recently, in last financial year, it showed profit, and now it has become profitable company. And there is no problem with the growth of this company. The sales compound, you can see it's very good, close to 40 to 50%. Profit growth also, now it's growing. CAGR for 3 year, now it is better, 3 year 23, 1 year 167. Return on equity is still in negative, but I think this should improve as and when this company gets much older. Next company we have is LTTS Technologies, and if you look at 6-month return, it has been 11%, YTD has been 3%, 1 year 5%, 5-year to 54%. So in the period of 5 year, again you'll see a good return. And if you look at the maximum chart pattern from 2016 onwards, it has given 520% return. So this also is a good company. It is still not a very big company. The market cap of this company is just 57,000 crores. There's a similar company also, which is Tata Elxsi. So out of these two, you can go with either one, either LTTS or Tata Elxsi. Both are good company fundamentally, and in the longer run, I think both companies should do well. Here you can see the sales growth. 10 year has been 53, 5-year 13, 3-year 20, 12 trailing month 10. There is a little dip. Profit growth again very good. 12 trailing month there is a dip. And stock price CAGR 5-year has been good. 3 years nothing. 1 year almost nothing. 3%. Return on equity is very good, about 25%. So business wise, it is good. It's just that this phase was there wherein all the IT related companies were not doing that great. But as I said earlier, things are now changing. We should see some good growth in IT companies from here onwards. Next company is KPIT Technologies. 6-month return has been 3%. YTD nothing. 1 year return has been again nothing, 3%. 5-year return has been very, very good, 1600%. And for this company also, market cap is not very big. It is just 41,000 crores. If you look at the sales growth has been very good. 5-year 50, 3-year 34, and 12 28%. That is the reason you were seeing 1600% return in the period of 5 year. Profit growth also has been excellent. CAGR also 5-year, you can see 76% CAGR return, and that is what happens with 76% CAGR return over the period of 5 years. You get overall 1600% return. 3 year CAGR has been 45. In the last 1 year, there has been nothing. But the company business is good if it keeps growing at a decent rate. I think this company also should do good in the longer run. Return on equity is also very good. Now coming on to the small caps in the technology sector. So within small cap, our first company is eMudhra. If we look at 6-month return, it has been 9%, YTD 107%, 1 year return has been 121%, 5 year return has been 269%. And if we look at the maximum chart pattern, it is the same because from 2022 it got listed. So it has not completed 5 years also, it has just completed 2 years and it has given a return of 269%. And if you look at the market cap is also very small right now. It is just close to 8,000 crores. So it's a small cap company, as I mentioned earlier. Now let's look at why this company is giving such a good return. What is the business model of this company? So the small cap company will go into a little bit detail because the other company that we discussed, I think more or less are very popular and people generally know about it. But the companies now that we are going to discuss may be new for some of the viewers. So let's go. So what is the business of eMudhra? eMudhra is a license certifying authority involved in issuing digital signature certificate in India under its eMudhra brand. So we can say its client is government and the company is licensed by the controller of certifying authority CCA, Ministry of Information Technology, and operates under the guidelines set by IT Act in India. So its major business comes from the government. So here you can see the company is the largest certifying authority in India with a market share of 39.8% to issue to individual organization digital signature certificate and offer e-sign. And this segment revenue grew by 22% between FY22 to FY24. So there is a good growth and I think the business model is good. It is only going to increase as more and more people get onboarded into this digital signature. And here you can see that this company not only caters to India, this company caters to 25 countries globally, including Chile, Mauritius, Kenya, Indonesia, UAE, Peru, USA, etc. And it has expanded its presence into emerging markets such as Philippines and Malaysia. And here you can see that this company has partnered with global enterprise like SAP, Microsoft, AWS, TCS, Infosys, Manai Corporation. So it's a small company, but I think growing at a good rate. And business model is also very good, which is going to sustain in the future, which is going to be the need of the future. And here you can see why there was such a good return. The sales growth has been very good, 5 year 30, 3 year 42, 12 year 37%. Profit growth also you can see very good. CAGR return 1 year 116, return on equity is also decent, above 15%. So a good company in this different kind of a sector, still a very small company. I think you should definitely keep this on your radar. They have a different business model, which I think is going to sustain in the future, which is going to become a requirement in the future. Next company in the small cap area in the technology sector is Zaggle. And if we look at 6-month return, 6-month return has been 92%, YTD 159, 1 year has been 133, 5 year 256, but it is not 5 year return, it is just a return of, you can say, 1 year, few months, because it got listed in 2023. So within a period of less than 2 years, it has given a return of 256%. And you can guess now what could be the reason. And the market cap of this company is again very small. It is just 6,094 crore, close to 7,000 crores market cap. This is also a very small company. And here you can see the reason why, because the growth has been there. In last 3 years, CAGR growth has been close to 50%. 12 trailing month growth has been 61%. Profit growth has been very good, 3 year 32, 12 trailing month 273%. CAGR return 128 and return on equity is also decent, around 14%. Now let's look at the business of this company. So what this company is doing is, this company is providing financial solution and related products to different businesses to manage their expenses like travel and expense, which we generally have in all corporates, those kind of expenses for different corporate, SMEs and startup, which it is doing through an automated and innovative workflow. So it is providing a workflow, a product, a system to these SME startups and different corporate to manage their expenses in a much better way. And travel and expense is available and present in all the corporates. So this company also, I think, has a potential to become big if their product is good, which looking at the growth that the company is doing, I believe it is a good product. Then I think the scope is very, very big for this company. If they get into large corporate houses, then they will have very good growth. So this is also a company which has a business which will sustain in the future, which is a requirement of the future. And if it is helping the corporates and SMEs in managing their expense better, this can also do very well. And you can see here also the market has given it a PE of around 98% now, which is not very high. If it continues to grow at this rate, But if we see a dip in the growth, then we might see a contraction in the PE. But if it continues to grow in this rate, which is not very difficult also, because this is just a 7,000 crore company as of now, so the growth area is huge. So this also you can keep it on your radar. I find it interesting. Next company is Newgen Software Technologies. 6-month return is 51%, YTD return 74, 1-year return 97%, 5-year return has been excellent 1300%. And if you look at maximum chart pattern, maximum return has been 1000%, got listed somewhere around 2018. And the market cap of this company is also not very big right now, it is just close to 20,000 crores. So in IT area, there is a huge headroom for the companies to become bigger. And this company also sells its products just like Zaggle is doing right now, which is at 7,000 crore. This company is already close to 20,000 crore. This company also sells its product workflow related to different corporates and provides solutions for managing different finance related processes. And this company also has given very good return in 5-year period. And the reason, you can again guess why. So the reason is in front of you now, the growth. You can see the growth. 5-year growth was 16%, but in last 3-4 years, the growth has been very good. 3-year 23, 12, 21, 26, which is very consistent. Profit growth is also very good, you can see. And that's why the stock price CAGR also has been very good for 5-year, 3-year, 1 year now. And return on equity is also good, 20%. So this also is a good company. You can keep it on your radar. This also is growing at a consistent rate around 20%. Now coming on to our final last company in the small cap area, which is the Latent View. Now, if you look at 6-month return, it has been nothing. YTD return 11%, not that great. 1-year return again not that great, 7%. 5-year return in negative 27%. Maximum return again same, because it got listed only in 2021. So from the time it got listed, whoever has bought at this price, they are still in loss. But again, it is similar kind of thing with this company also. It got listed at a very high PE. But now let's see how the company is doing. And also generally looking at the chart pattern, so when it got listed at 697, close to 700 rupees, and it is now already at around 507. If it breaches the 700 mark, then after that we can expect a good run up in this company. But let's look at the growth and profit of this company, if this company is really growing or not. Before going there, let's see what this company is doing. Company provide analytics services and analytic consulting, business analytics and insights, Azure, advanced predictive analysis, data engineering, and digital solution. So it is a kind of an analytics service provider, and this company provides services to blue chip companies and technologies in the BFSI, CPG, retail industries, and other industry domain. And their business is more related to data analytics, which is again a business model which is required right now, which is very much in demand, and which is going to be in demand in the next few years also. It's not a traditional business. So just like Zaggle, just like eMudhra, their business is also the new age business, we can say. And the reason I've selected this company is because you can see the growth is there in this company. The growth in last quarter was 34, before that 20, 21, 13% or 14, you can say, then 17, 23, 20, 34, 39, 36, 47, 37. So growth is very much there, and the growth is also very good. The only reason why I believe this company went down after listing was it got listed at a time where it was like, all the companies was getting listed at very unrealistic PE, and this company also got listed at a very high PE. After that, there has been a PE contraction, but now I think it is now settling down, and it has been around close to 2 to 3 years now already, but the growth is very much there. So this also is a company which I think now we can focus on, because if the growth continues, then we can see upside in this company also. And same you can see in the growth, sales growth, it has been good. Profit growth also has been good. In 12 month there is a little dip. CAGR we have already seen there has been nothing. Return on equity is also fine. So this at this point is a little risky compared to all the other companies that we have discussed, because we don't know what is the PE that the market will decide for this company. But when it starts moving, and once it crosses its level, which was around 700, I think then it will become very interesting company to look at. So that's it in this video. These were the 10 companies which according to me are good companies in the technology sector, into different ranges like mid, small, and large. But please remember, these were all my views. Please do your own research and study before taking any buying and selling decision. So bye for now. We'll meet in the next video. Bye bye.